Okay, welcome everybody. That's the last event of the series of events that we are running with Tribe 47. And I think so far we did like 4 or 5, and we will continue to give you guys like more knowledge about like how to grow e-commerce and D2C in the next year. And this day is dedicated to Black Friday. Black Friday is I guess it's 1 month from now, so it's like about time to think about it, to plan campaigns, and to learn how to validate if the Black Friday was like a profitable activity or not. Okay, so who is the Black Friday customer? As I said, I'm from Sublime. My background is in data and analytics, specifically like marketing data and analytics. And in Sublime, we identify growth opportunities for D2C and e-commerce brands in Europe and US. And based on those insights, for example, like Tribe 47 can like execute growth. Okay, so first like warming up question. So how do you think? That's a tricky one. What's the goal of Black Friday sales? At least what's the goal for you if you're like running a Black Friday campaign?
To increase volume.
To increase volume? Only like volume? Like to make money? That's a good one. Like to clear stocks? Anybody? No?
I know clients like this.
Sorry?
I know clients like this.
They're like clearing stocks.
Yes, we have a client who are just introducing new packaging, and for them, it's like Black Friday. One of the reasons to run it is just to get rid of old packaging and to go in the year with a pure new one. So
okay, so they don't really like count on profit. They just want to like get rid of the
profit too, but they like choose this product which they're changing to be the front of the Black Friday.
Okay, so I think all of these goals are correct ones. But like as Eva said, it's all about the money because like we want to earn at the end. So the profitability of Black Friday is not a black magic. It's like it's a standard like profitability analysis that we do also for our other activities. The only difference is that we calculate the revenue for Black Friday cohort and we divide that by Black Friday cohort costs. So it's not like rocket science. To be more precise, we calculate like Black Friday cohort lifetime value and we compare that with Black Friday cohort acquisition costs. We talk about like customer lifetime value and customer acquisition costs like a couple of events ago, and the presentation is available online if you want to like refresh those key concepts. So next question, how would you describe the Black Friday customers? Because we have the revenue side of the Black Friday customer and we have a cost side of Black Friday customers. So how would you like describe the Black Friday customers? Are they like the standard customers that you're having in your business, or they differ in some way? Impulsive, okay. So they are discount driven, you would say, or okay?
Bargain hunters.
Bargain hunters. So very sensitive to price.
Yeah.
Okay.
But also normal people, like everyone.
So normal people. In what sense? I mean, they are like regular buyers, but when Black Friday is coming, they are like hunting for discounts, something like that.
Maybe buying something they always wanted, but it was on the wish list, kind of.
Okay, so not that impulsive, but more planning and hunting for.
Like, okay, I'm gonna buy this expensive sweater, but I will wait for the Black Friday. Maybe they're gonna put it on discount, and then I'm gonna buy it. So also not
okay.
Only impulsive.
Okay. Okay. So do you think like they didn't spend like more money than standard customers or less money? Let's say in short term. Let's say in this purchase that they are making on Black Friday.
They spend more.
They spend more. Okay.
It depends.
Mm-hmm.
In general, more, but probably per shop, I don't know, per purchase, less. That's why we wait for the low prices.
Okay, but in Black Friday, they spend less or more?
Usually they do have a certain, let's say, Black
Friday budget
Mhm.
that they can then divide by several shops, platforms for the goods they expect to buy.
Okay, and from the point of view of the e-commerce that they are like buying from, do you think that like they are like spending more or less money than like usual customer of this e-commerce, or you have no idea?
Black Friday, they spend less.
They spend less. Okay. Okay. Good. It depends. That's a very good answer. And how do you think? Like, are they more expensive to acquire or less expensive to acquire, or maybe like the same?
Depends on
Yeah.
depends on the type of the discount. Yeah?
Okay.
If the discount is huge, the cost is low.
Okay. And when you are thinking about like the cost of when you are like thinking not about discounts but about ad costs, is it like more? You need to like spend more per customer to, for example, in Meta or in Google Ads, or less?
Yeah.
Rather less.
It should be less.
It should be less.
Yeah, but
Well, it is.
During the promo period, it's advertising costs are rising
Okay.
because more people, like more companies, are trying to ads.
Okay. Yeah, that's a good one.
discount is part of the cost.
Discount, yes, it can be treated as it's treated as part of the cost, or it can like be treated as smaller revenue stream. It depends, but yeah, I agree. It's like a cost for the company. Okay, so all of you are right. So the topic is very, very complicated, and in this presentation, I will try to show you how, in our opinion, from our perspective, how the Black Friday sales works and how companies are making profit or losing on Black Friday. And we will also on the way, we will also define the Black Friday customer profile. So I will start with the description of Black Friday cohorts, so all the customers that you are acquiring during Black Friday and how they behave and how they are spending money. We have some benchmarks here. They are based on our data, but also on data that we found on reports that we found online with Meta and Adobe Analytics. We'll try to do we tried to be objective, not biased by our customer base, but we weren't able to find every metric that we wanted to show you. So some of the metrics are only based on our data, and it will be written in the source below the chart. Okay, so the Black Friday revenue formula is the normal revenue formula. So the lifetime value that we want to catch, because the Black Friday clients, the Black Friday customers are not only buying on Black Friday, but they will become our customers. So we want them to make a couple of more transactions. So in order to catch the whole revenue stream, we need to calculate lifetime value, not only count the first purchase that they made on Black Friday. So lifetime value is the acquisitions. So the lifetime value of the Black Friday cohorts are all the acquisitions, so new customers that we acquired on Black Friday, times the average order value, so the purchase that they made. And also we need to take into account the retention, so how many of them returned and how many transactions they've made after Black Friday. Fun, not the fun part, but the really interesting part is that Black Friday is driven by discounts. It's all about discounts, and the discounts, they have the effect or impact on every lifetime value, every part of lifetime value, every box. For example, the discount decreases the average order value because we are giving big discounts for customers. So assuming they are buying the same amount of goods that they would buy if they were no discount, we will earn less because we are giving discounts. We also by giving discounts, we are also attracting clients that are more sensitive to price. So the retention can be a little bit different than our clients that we have normally. And also the discounts also impact the acquisition, because when we have discounts on our site, we can see that our CVR is going up. So we are like acquiring more customers from the same like the customer base that we are, or the traffic that we are driving to our site. Okay, so let's take a look on each of these each of these components. So Black Friday customers expect high discounts. That's everybody likes to agree. I think that's the only thing that we can agree on today. So Black Friday customers like expect high discounts, and typically the Black Friday discount rate is around 20-25%. And the discount starts very early. Sometimes it's not only like the Black Friday, like the day, it's a week or even 2 weeks, sometimes like Black Month. I think like Tribe47 will tell you more about that. And the discount rate it differs like from category to category. Like you can see that for electronics, it's like the highest one. For furniture, it's around like 7, so it depends. Our data like shows that the average discount rate is about like 22% during Black Friday, while without Black Friday it's around like 11%. So the increase is like twofold. The Black Friday customers also like convert like much more eagerly during Black Friday because of the discount. But the really interesting fact is that the conversion rate is going up. It's like correlating with every discount rate, but it's like stopping around like 20%. So it seems that it's not like that beneficial to give like the discounts above like 20% because it won't increase CVR. And the average conversion rate, like for our clients, for the clients that we did some consultancies and in the past, and for our clients using like Sublime, the average conversion rate is like 1.3 to 2.4, like higher than the standard one. In terms of average order value, well, as you said, like it depends if it's higher or lower. Usually, like if you have like companies like selling products that you cannot like stock up, for example, like you want to buy something from a wish list or a PC, you will buy only one computer because like you don't need like 3 computers. So the average order value for this kind of purchases would be like lower than the standard one because you like gave like, instead of 10% discount, you gave like 20% discount. But in businesses when you can like stock up and, for example, like buy food not for a month but for 3 months, or the food boxes or something that you will like consume that has like the long like shelf life. You can like stock up, and the average order value will be like higher, but it means that your like future sales will be lower because like people like bought on Black Friday and won't be like buying in a month or 2. There is a funny trick with free delivery thresholds. Tribe47 will tell you more. Because it's more like about campaign, how you like structure prices and your offer. That helps maintain like the average order value, because when the free delivery threshold is like at most like 20% above average order value, like people tend to buy more to reach that target. And our data like shows that the average order value, depending on the client, can be like lower or higher, depending if you can like stock up the product or you just like buy the thing that you would like normally buy, but for a lower price. Retention is a very interesting stuff because there is like clear correlation between the retention rate and discount rate. So the higher the discount rate, the lower the retention rate. So it means that people like the people that we acquired with discounts, they are less prone to return. And this difference is quite huge because people that we acquired on Black Friday, customers that we acquired on Black Friday, are from 40 to 90% less likely to return. So the retention is not that great. Okay, so what does that mean? Like, what's the impact on customer lifetime value? Because there are many like parts moving, so we need to take a closer look at customer lifetime value, so the revenue side. So what's the outcome? Is the customer lifetime value like higher or lower? So basically, from what we have seen, the Black Friday customers are worth less than the normal customers, and usually it's around like 30-40% less. It's because of the retention value of the retention. It's because of the lower average order value for certain businesses, and it's also because of the customer conversion rate going up, but also like slowing down around like 20%, around the discount 20%. Okay, there are also like some other interesting facts that we found when we like dug into the data. So the Black Friday customers are less likely to subscribe, and they are like 25% less likely to subscribe. So they're like one-time buyers usually. But they are really like more likely to purchase product sets. It's like, and the difference is quite big. It's like more than 20%, more than 30% more likely to buy product sets. So they like sets. They are faster to convert. They need like 20% less time, 10% less interactions. CVR is higher, so that makes sense. And that was really interesting because they are just as likely to subscribe to a newsletter just as the normal customers. So it would seem that they are like only looking for a discount, but they really like want to know about like future offers of the brand. And they were like more or just as likely to leave a product review. So there was a small difference, but not that huge. Okay, so that was the revenue side. That gave us a little bit of understanding of who the Black Friday customer is. And on the cost side, we have, again, like the same formula as for calculating like just profitability of regular activities, but did for Black Friday cohort. So we want to calculate on the cost side. We want to calculate customer acquisition cost, blended customer acquisition cost to be precise. So the cost of acquiring like a new customer on Black Friday. And to do it, we take ad spend, so all the money that we spent with on advertising, and we divide that by acquisitions. Acquisitions translate to traffic and CVR. We talked about like CVR a couple of minutes before. But the traffic can be like can be derived from ad spend and cost of ads, because like we spend some amount of money. For this amount of money, we can like buy traffic, and the cost of traffic is also like a big factor here. So let's take a look at the ad spend. So ad spend during Black Friday is skyrocketing. It's going up like between like 1.7 to even like 3 times, and it matches with our data. We see that customers are like spending like 2 to 4 times more on Black Friday. And it translates to CPC or CPM, so the ad cost going up, because like everybody wants to buy like ads on Black Friday, and it's affecting even like the businesses that are like not running Black Friday like discounts or promotions. For example, like telemedicine. So there are like some collateral damages. Here we have like the data for Q4 2022 from Meta. No scale. But we can see that the average CPM is like going up like around like 75%, and it matches the data that we have, because depending on the customer, we see that CPC or CPM is going up by like at least like 13% to even like 175%, so 2.75 up. I know that Tribe 37 has like better results with that, so probably you should like find. Yeah, sometimes, but that's the range that we are like observing. So we are like buying like traffic for more. So what happens to customer acquisition costs? So how much? So do we pay like more or less for acquiring like a customer on Black Friday? Well, going back to our formula, it seems that the most important components of customer acquisition costs are CVR and CPC, because the ad spend, we know how much we want to spend. The traffic is the derivative of ad spend and CPC, and CVR we want to analyze. And the customer acquisition cost can go up and down, and it depends on if the higher CVR that we have because of the Black Friday, because of the discounts, is outweighing the higher ad cost that we are experiencing because everybody is buying like ads on Black Friday. So a little bit of math. So if the CPC is like the difference in CPC, the delta is like lower than the delta of CVR, so we are like paying like so the change in price is like lower than what we are than the change in conversion rate. So we are like converting like more people from the traffic that we are receiving that we need to like pay for them. Like the more we want to pay for them, the customer acquisition cost will go down. So we can like have the can have like traffic being less expensive than the usual traffic, the standard traffic. But if the CPC is increasing like more than the conversion rate on our site, it means that our customer acquisition cost will go up. It's not only about customer acquisition cost going up and down, it's only the cost side. And it also like matches with what we are seeing with our customers. There are customers that have like lower customer acquisition cost on Black Friday, and there are also customers that are having like customer acquisition costs like being higher. So it's all because of this. Okay, so we talked about revenue side, we talked about cost side. Let's put it together and talk about like profit, because we want to make some profit. So Black Friday profit, quick reminder, is the Black Friday cohort customer lifetime value divided by customer acquisition cost. From what we have seen, from our experience, we see that the customer lifetime value to customer acquisition cost, so profit, is nearly always lower for Black Friday than than standard. So what we are like trying to do with CLV and CAC is to balance the drop, if you have one, in customer acquisition cost with the drop in the customer lifetime value. So we want to have lower profit, but not that low that we will like be like having like a loss. So because like maintaining the usual level of CLV to CAC is like challenging, and we didn't see that anybody like succeeded. So we need to like define the minimum threshold, profitability threshold that you want to hit, and optimize your site, your discount, your ad spend to meet that target. And our customers, like the benchmark that we have for our customers, like confirm that we couldn't find like a customer that had better profitability for Black Friday than the normal one. There were some that had like 50% lower profitability, some that had like 10% lower profitability, but no customer like was able to maintain the same level of CLV to CAC. Okay, so key conclusions. There were like a lot of measures, metrics and stuff. So key conclusions to simplify things. So first of all, discount is very important. That's not rocket science, but because it's a main driver of revenue, it impacts like your AOV, so average order value, but also like CVR. That's maybe not that apparent link, and also the retention. Discounts over like 20%, they don't increase CVR further, more or less. So if you have like more discounts or higher discounts, you need to like take a closer look if they are working or you are just hitting your profit. And the Black Friday customers like buy product sets more often. In terms of like profitability, you need to like set the minimum profitability profit threshold, because you will like we will like earn less per client, but if you have like a big client volume, you can like generate like a lot of money in this way. And you need to like find a balance between like lower CLV because of discounts and lower CAC. And we prepared the Excel file that you can like that will help you like to run some scenarios based on benchmarks. you just input like your business data, and it should calculate the Black Friday outcome more or less. You need to like take that with the grain of salt, because it's based on the data that we have, and we are like working with clients that are like D2C clients running subscription and e-commerce clients. So it won't fit like every business, but we think like it's something it will help. Okay, so do you have any questions? Do you have time for questions? Or yeah. So do you have any questions? I don't believe. We will like send we will send it with the after the event, and you can also like hit me on LinkedIn because I know you. Anything else?
Will you have a Black Friday promo?
We?
Yeah.
We are one of this business that like it is hit by Black Friday, but we don't do discounts. Okay, thank you very much.
I have one question.
Okay.
Do you have any data that supports that Black Friday is just mainly a marketing stunt? So whatever you earn during Black Friday is nice, but it's more or less like gives more profitability during the whole year, like after the Black Friday, because you generate more traffic to your site, right?
So I don't know if I understood correctly, but you are asking if we have data about Black traffic, like generating like new customers that are staying with you like through the year.
Yeah.
We have data that don't support that, but we have only like, as I said, we have only like very specific clients. So it maybe it's not true for all of the brands and all of the business models. Okay, thank you very much.